Welcome back, friends. So we are about to commence a brand new week on Wall Street, and globally there were concerns that there could be US shutdown from October 1. They have narrowly missed it by a whisker, but this is only a stopgap arrangement for 45 days. Now, 45 days runs out as quickly as you can just blink your eyes and it'll be over. Not quite literally though. But it's a very short period of time. There are lots of headwinds going forward and they will continue to exert pressure. So it's not just people keep looking at the yields and then they keep looking at the inflation. Inflation, my friends, is now getting to be an old story. Markets always move on new news and not on old news. Well, we have the student loans coming up for repayment. We have savings rates going down and almost hitting the top. There is still many factors which are beginning to build on each other, and they all are going to have a cumulative impact, not only on the earnings but of companies, but also on the stock markets across the world. We may be seeing the multiplier effect of the past working in reverse now, and the lagged effects of the Fed raising interest rates may also start becoming visible. Fed may begin to doubt that the data which it is using is probably not representative anymore of the state of the world economy, of the US economy. Overall, pace has slowed down and there's an overall macro drop that's taking place. The strikes may put, auto worker strikes may put brakes on the economy, but it may, in a perverse way, even lead to a situation which can encourage the Federal Reserve to start at least thinking in terms of reducing interest rates. So we had the New York Fed Chairman John Williams talking of higher for longer. I don't know how long will that hold the story. But what was being talked about as a Goldilocks scenario just 3 months back is now getting converted into something very different. Do not forget the fact that October is normally a seasonally weak month. October and November, and there could be many factors which may suddenly come and spook the party. You may start on a decent note because of the avoiding the US shutdown. At the same time, all these factors that I'm talking about are here to stay. None of them have been resolved, and until there is a financial closure or there is some sort of a closure on them, you may find that investors across the world will continue to feel jitters. There is also a lot of geopolitical risks which is leading the oil prices higher. And we have many economists like Dan Swak talking about net exports being revised upwards, and that could lead to growth also getting revised upwards, and more than 5% is the growth therefore you may expect in the US economy. We also have Nancy Lazare talking about the three bears, right? They're one of the three bears, and the three factors that are beginning to come in, which I've discussed also from time to time: the oil prices, the falling savings rate, the student loans coming up for repayment, and you have a nasty cocktail. And the shutdown, although it has been avoided for now, that is, markets do not like uncertainty, and 45 days is a very short time frame. I believe they will start talking of the next time period within which the US shutdown could happen once again, and this could spook the markets. So friends, with so many headwinds, do be cautious. It's going to be a seasonally weak month, October and also November. And whether this presents a buying opportunity depends on how soon these headwinds diminish. To get to know more, please to join our Prime or Prime Plus groups for the US markets. For the Indian markets, you can join Premium or Premium Plus or Premium Elite. And of course, a very subsidized program. We have the Ganesh Chaturthi special last few days. You can join that as well. You can also join a combo package which combines the US markets and the Indian markets. Number to get in touch for all of this is 9820861044. Have a great investing week ahead. Take care. Bye-bye.